The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Today we have to look at the German DAX and the FTSE, and you can see, folks, they took that sell-off in stride and came right back, just like we did here. I'll show you why I think it's happening. Pretty good idea of what's going on, but we'll have a pretty good idea after we look at this. Jeff Hughes from Alpha Insights will be our be on the break today. He's got some great stuff on credit spreads and some other things that look very, very interesting. So we'll keep those things looking at what's going on. Now, I do want to mention here, folks, that, you know, we had a situation here in Apple where the market was extremely positive as far as the amount of, let's just get this up here so we can see it, that the amount of earnings and everything are just absolute blowout. They've done this before, though, had blowout earnings and sell-off, so it's no big deal. We do have that 3 drive to a top pattern up there at 150. We broke down, we made a double top up there, and then you see we came off a few days, and then the earnings came out. I think we're trading at around 145 right now. But what's interesting about Apple, if you look at it on a really short-term basis, if you're trading short-term, which we'll be doing when I do my all-day trading session on August the 15th, just look how it follows the Fibonacci numbers. You see the big ABCD to the downside, and the stops there. It rallies exactly up to the 61% retracement and immediately drops 2 points. So that's how you try to use those numbers. They don't always work, but when they do, they work pretty well. Okay, let's get to the nitty-gritty. Folks, the big thing about this big mini crash that we had here in the United States, it started in Hong Kong. If you'll remember, in China and Hong Kong, they started tearing it apart. But here's what's happened. The Federal Reserve banks of those countries, whatever they did, they all came in consortium yesterday, and we mentioned this, the importance of that 25,000 level in the Hong Kong index. We went to 24,890, I believe, and then turned and rallied, 500 points. We stopped exactly at the 78% level of the September low and exactly 61% retracement of the March low. That means this is a very, very important number, folks. And you can see it in the market. No one's scared anymore. They were scared one day, just like they were last Monday. They were scared one day, and that was it. Baidu and Alibaba still look like they could go lower, of course. But I'm bringing this to your attention because it's showing that there's consortiums in there that are playing games with this. Let me give you an example. We talked about this, and it's important to me to bring it to your attention, and I'll get this up here. Here is the NASDAQ over the last several weeks, of course. But you'll notice that number we were looking up, which is the 1.618, 11,130. The high was 11,134. But look what happened when the break came, folks. We have this huge break coming down in the NASDAQ, and we'll get it up here, right here, I believe. This is it. Hold on. And you're going to find this hard to believe, but this is what happens. We went exactly to the 50% retracement. Well, they missed it by about 50 pips, but of the July 19th low and the 1.618 expansion of the move from July 23rd up to the 27th, and then we have the one-day break. And what we do? Today we rallied up to, you'll never guess where, folks, the 78% level. So this could easily turn and go higher. Not any problem at all. And the same thing is true. And I'm basically bearish, but I'm saying don't get married to the position, boys and girls, because this thing it's coming back too strong. Look at the S&P where it held, folks. This is these numbers are right out of the algo books that they use at MIT and the financial engineering places, D.E. Shaw and Renaissance Capital. stops exactly at the 1.26% retracement. You don't see the retracements there, but that 43.64 was a 61% retracement of the low on the 19th. And what does it do? It rallies back. Now it's in a 135 pattern segment right now because we've got lower tops in here, so we could easily go either way. But this is not any indication that there's a crash scenario out there as of yet. It might happen soon, but I don't see any reason for that at all. Okay, today's my birthday, same day as Ralph Elliott, and I've had several questions. What was my most famous birthday? And, they're all famous. When you get to be 80, you're hoping for 81. I was sad to see 79 go. Anyway, I think it was 19. It was let's try it again, folks. It was 1991. It was my 50th birthday, and we were I was living at the big house at the trading house, and I knew they were planning something for me. What they did, they planned two parties, one little surprise party and then the really big surprise party. And the big surprise party was out at Fred Grant's estate, and Fred was a doctor there in San Luis Obispo, and he was one of the doctors that started Regeneron. Intuitive Surgical, that's what it was. And he had two daughters, and they were basketball players at Cal Poly, and he had a regulations type court. And of course, being a big Larry Bird fan, they gave me as a gift a sweatshirt, number 33, Larry Bird. And so I put this on, and there's about 100 people there, and there's a bunch of kids playing basketball because Fred's girls were certainly good looking, and these guys were from Cal Poly, the basketball team, and they were out there, and they started goading me about playing basketball, and I said, no, and they wanted to play for money, playing horse and stuff. And so finally I'd had just a couple of glasses of wine. I was feeling pretty loose. And so I played, I was still playing in 1950. I was playing quite a bit, so I was in pretty good shape. Couldn't do any dunking or anything, but I said, okay, I'll play horse with you, but you can't shoot any baskets under the 10 feet. You got to go 10 feet or farther out. Trick shots are okay, but you've got to do 10 feet. Okay, we'll do it. And the first guy says, let's play $20 for the first game of horse. And my daughters are both up there, and they're yelling, don't bet on him. Don't bet it. Don't bet it. You're going to lose. And that's a joke. Anyway, that's what they did. Anyway, I got out, and man, I had one of those days. I could not lose. I could really shoot when I was young. Well, up to 50, I was okay. But I was very, very good. A three-point shot, I could make those all. I destroyed these guys. But the real fun about it was I won $200. I gave the money back to him. But for the next couple of years, all through San Luis Obispo, Pismo Beach, Shell Beach, wherever we went for dinner or something, would always run into somebody that heard about that thing or was at the party and said how much they enjoyed me taking care of these young whippersnappers, and I certainly did. But to do it again, not a chance, and you know what? But that was quite exciting. Also, it was 1989. Jay took me to Rio de Janeiro on the Concorde. And then we took the whole families to Hawaii a couple times during the birthday times. But, that's pretty much it. Not a big deal. But that one I remember as much as anything else that we've been looking at. We had this trade that we've been watching for a very long time, folks. It finally fulfilled today, and that was the euro. It's actually working out pretty good. Now, we went to the exact number, folks. We went one tick under 117.95 in the September euro contract. You can see the ABCD. It gave you money on the downside, and it's giving you money on the upside. So ABCD is where it's at. We'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted the chart of a Tesla. John Jameson was my guest yesterday, and he talked about premiums. And you want to learn to be an option seller. If you ever go to CBOE, where Norm Winsky used to work, they're all wearing badges there, folks, and those badges say, "Sell an option, buy a Mercedes." So you want to be an option seller because that's a positive way of returning money. 85% of option sellers make money. 15% of auction buyers make money, and boy, you don't have to look at those odds very often to learn you want to do it. Now, there's a lot of different ways to skin that cat that I'm not familiar with. The straddles, strangles, bimbos, bombos, whatever they have. I don't follow that, but I know that option selling is a way to go. You don't want to be buying an option. Occasionally, the option's going to work well, but most of the time, like they say, 85% of the time, options go off worthless, and you don't want to play with those types of odds. It's not good. There are times when it does work good, but you have to be a professional and know what you're doing. They have options now that expire every 2 or 3 days. I didn't even know that stuff was available anymore, but they certainly do. Now, but that's why we're looking at Tesla. The same thing happened in Apple yesterday. If you'd have did either side of what the implied volatility was, you would have made a lot of money. It wouldn't have made any difference which way it went. I mean, it was amazing. They build these in, and people get snookered into it, and it's pretty tough. Now, here was one that happened this morning early, and was telling you that there was something was going to happen in the Russell. This is the hourly chart. You can see this thing has been in a big bear market since July the 5th. We made that big ABCD down there the 19th. That was the big collapse day when the Dow was down 900. We rallied up we made the 135 pattern. And then we made a beautiful Gartley here this morning. That's a perfect AB equals CD, folks, at 2169. And the market turned and started going higher, even with the S&P and the Dow selling off. The Russell was going. So they're taking turns. And there again, you're talking about algorithmic trading. They're out there doing that spot. And it's going to be really interesting to see what's going on. Steve Rhodes just made a post about the that Hincks confirmation there at that with that ABCD. Yes, Steve, the only reason I look at that is because, we've got so many, clients, customers, friends, and relatives in Hong Kong that I do a chart for them just about every day. And we've been alerting them to this. And yesterday, the whole world was coming apart. Some of these guys had huge short positions. And we were pointing out that look at these numbers. I mean, you had a 786. Let's put that up there again because this is what we're here for, is to reiterate what these things do. And at least that's what I do. Been doing it for so long, 61 years, boys and girls, believe it or not. All right, you can see we made the 78% retracement of the September low and the 61% retracement of the March low. This was within just less than 1%, folks. So that's a main thing to look at. Hold on a second here. My little thing is starting to beep here to tell me it's birthday time. Just give me 1 second. We're getting close, but not yet. Not cigar yet, but getting close. Okay, let's move on here to one other thing that I want to bring to your attention. Hold on. That's about this Hang Seng. Now, we've had a big gap down. Now, we're bound to get a rally, and this may or may not hold. The one thing we do know about this, if we go below 24,800 now, after a 600-point rally, not good, not good. And the other thing is if you only get a 3 to 5 day rally, maybe it gets up to around 26,000 and it doesn't do much, really quiet 382, those are the ones that you got to pay attention to, folks, because those are the ones that get these things ready to take it to the downside. So remind yourself that. That's what we're trying to do here at TFNN, to spot these things to give you a better idea of what you have to look at. The other one that we've had that's been a huge move has been these Mr. Z had been bullish this for so long, and that's been the natural gas. We went right up there to that 418. The high was 418.60. We traded all the way down to 288.3 today, so it was down well over 30 points in that, and it's just going back and forth right now. So we're keeping an eye on that, because if we get another little pullback, this may be a bullish pattern where it could go higher. Anything above 418 now in that natural gas, should we get that, then that would be bullish. But right now it's in a bearish mode. We're waiting for rallies to sell, and not paying attention for, a really good buy yet, because there's no buy signals down here that even come close. I think the first one's down about 385, as I recall. So that's a long way down from where we were just a few days ago. Those are the Coffey. People have asked me about that. That thing just went off the charts, and it's made some type of a major top up in here. I'll do it as what we were looking at here from the other day here. Where's the Coffey? And it went so crazy here because this is the daily Coffey chart. Folks, the high on this was 225. In other words, it went from 220 on this chart, which was the target was 207. It backed off to 191 in 2 days. And then in 2 days, it shot up another $30 per pound, and it went up to 225. Now, that's going to affect Starbucks. I don't know if the stock is selling off for that. Well, they'll just pass the people that pay $8 for a cup of coffee. They don't mind paying 10, so it's not going to make any difference. It's economic feasibility, I guess, because they don't really care. If you have any questions, 877-927-6648. If you'll remember, on Monday we had Stan Harley as our guest, and one of the things he alerted us to was the fact that this advanced decline line has started to roll over, and with that big down move we had, that also pushed it down. So you got to be careful on the long side up here. But as the charts are saying, it ain't over yet, and it may not be over for a while. So you got to pay close attention to it, because these are the things that try men's souls if you try to get in a little bit too early. So just remind ourselves that. Very, very important. Okay, now the next thing that we want to talk about here is, hold on 1 second, and that I think I covered Mr. Appel. I did that. The S&P here. I wanted to show you here where we are in the S&P. We've made a 135 pattern on, this is a 15-minute chart. high made up there at 416. We have the big break. We dropped 50 handles down to 43.64, 61% retracement of July 19th. 1.27 of the low on the 25th, and we have these same rallies. If you look at the rally between July 25th and the 26th, you're going to see the same rally that we just had between the 27th and the 28th. They're spot on equal, folks. They're 38 handles, and that's exactly where we're at now. We're trading around 43.95. Any move below 43.64 sets up an ABCD pattern that will take us down to 43.44. So that's the main thing to keep a close eye on. Please try to stay tuned for Jeff Hughes, because he's got some great stuff on credit spreads and some other things that look really interesting to me, things that I don't follow that determine, how the money speaks in Wall Street. And that's what you have to do, is follow the money. I'm a chartist. I have a pretty good idea whether buying or selling, but some of the underlying things I don't have a clue, and I think he'll give us some pretty good ideas in here. So that's the main thing. All right, let's move on here, and we're going to have Steve. I'm watching Steve Rhodes comment here in the room. We have Jeff Hughes coming up, folks. Alpha Insights. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find a newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Jeff Hughes, Alpha Insights, on the line. Jeff, how are you doing today?
I am terrific, Larry. How are you?
Still living the dream. I'm 80 years old today, Bubba. I never thought I'd be doing this at 80, but I still love it. The day that I started back in 1959, so
happy
been
birthday.
Pretty lucky. Yeah, thanks a lot. Hey, listen, you're showing a chart here on credit spreads, and that's a little bit over my pay grade. You want to tell the folks what you're looking at right here? This looks like a situation of following the money.
Yeah, what's really happening here is that even the lowest credit quality borrowers out there are benefiting from this massive recovery that we're having in earnings. And, a lot of people, and this really stems from a conversation I had with a very bright fundamental analyst and economist who pointed out that, real GDP doesn't matter. It's nominal GDP that drives revenues and drives earnings. And we're experiencing possibly the largest nominal GDP growth in the last quarter in U.S. history. Something north of 13% probably will be the number. And that translates into 40% revenue growth. And that's why the earnings that we've been seeing in the market are so strong. And what this does is this makes it possible for even the worst borrowers to make their payments. And that's why credit spreads are so tight. And this is just looking at the corporate market. If you were to take this option-adjusted spread and put it on top of Treasury yields, the stacked or combined yield between high yield and U.S. Treasuries is the lowest it's ever been in history. Wow. Based on that, in and of itself, we've kind of insulated the U.S. economy from what a lot of people would call a credit default, right? Like we saw back in 2008. And so that's absolutely not something to be concerned about based on the numbers that are being generated from the likes of Apple and Google and Microsoft and every other company for that matter. 88% are beating estimates.
Wow. Hey, I posted this chart of this cycle chart that looks pretty cool. What do you, it looks like we're topping in here based on this cycle composite.
So, yeah, that's what kind of flies in the face of all this. We've got this great news. Second quarter growth is a record. Earnings are a record. All these companies are beating. But the cycle composite looks like it's poised to top the first week of August. Well, today's August or July 28th, so the first week of August is next week. By next Wednesday, I expect to see some pretty serious action in the market. And so the question is, should we get in front of it and get out of the market before it tops, or should we be here for the blow-off top? And I think what's happening here, and you can see it in the NASDAQ, which is strong today, only up about 0.5%, but we had these unbelievable earnings reports out of three of the biggest companies in the world. And now we're going to get Facebook tonight and Amazon tomorrow, the five biggest companies in the S&P 500 reporting. All are expected to blow expectations out of the water. And I think what we're going to see is we're going to see some follow-on buying into the end of the week and in the beginning of next week. And we could very well see a blow-off top. We have been calling for some time, as you know, a move to 4,600 on the S&P 500. And we think that we could see that really over the course of the next 6 to 8 trading days, including today. The vast majority of that achieved. And in the NASDAQ, we think the NASDAQ 100 could go up by 1,000 points over that period of time. And a lot of people think that sounds crazy, but if you measure where we are today versus where we were last Monday at the lows, that's 150 S&P points. We only need to go up about 150 more in order to hit my target. So it certainly can happen in that period of time.
I gave up trying to say crazy here and crazy there in the market because I've been doing this a long time, and I've definitely seen crazy. I didn't think we'd ever see anything like the dot-com bubble, but we have. And, of course, this is not a dot-com bubble. This is totally different. Now, you're looking here at the Elliott Wave analysis. Is this where you're getting these prices of 4,500 and 4,600 in the S&P?
Yeah, we're using a variety of different methods to calculate that upside target range, and it's basically a traditional measured move, which would be kind of measuring the depth of the prior base. That sell-off into March of 2020 last year left us a nice deep base that we can project higher as we saw the market break out, right? And that gets us to about 4,600. There's also a good equal swings measure that we put in there. The measured move is the red arrows, the equal swings are the blue arrows. They both kind of come in around that 4,600 plus or minus 50, and so that's what gives us the range. There's also some Fibonacci projections that can get us right in there as well. But what's interesting to me is if you take a look at the way that the channel has evolved since last March, it's been very steady and orderly despite all of what people are claiming to be volatility in the market. It just looks like a very orderly bull market. You've got the 10-week and the 20-week moving average, both up and to the right. They've got a very decent spread between the two of them, and it's been consistent all the way up. And where we are today, and this was a weekly chart looking at Friday's weekly close, a bullish engulfing weekly candle that looks like it's poised to explode to the upside, and that's what we're seeing is follow through this week as we're well over 4,400 on the S&P and over 15,000 on the NASDAQ. And if we were just to rally into the median line of that channel, that gets us to exactly 4,600 by the end of next week. So we've got a lot of confidence in this analysis. But, I started my note this week by using a quote from Paul Tudor Jones. There's no training, classroom or otherwise, that can prepare you for the trading of the last third of a move, whether it's the end of a bull market or the end of a bear market. And I think that that's absolutely true. We are looking at the last third of the move right here. And if you think about the beginning of the move, we're talking about 2009 to 2021, okay? So that's that's the bull market, right? And the first move from 2009 to 2011 was about a double. We went from 667 on the S&P to 1381, and then we sold off 20% to 1,000. And then we tripled from 2011 to 2018, and we went to 2,900. Okay, and then from 2018 to 2020, we had this kind of zigzag, correction, right? And that was about, it brought us down to an average of 2,300. And if we get to 4,600, that's another double. So that fits that whole progression, right? And that gets us to the end of the bull market. And so we want to be prepared for that over the coming, week or two.
Wow, this is cool. Now, you have the next chart is about the internals of the market, the S&P 500 internals. You want to tell the folks what you're looking at here?
Yeah, absolutely. So, we saw this big collapse in market breadth a week ago, Monday. So that has largely been resolved. We've gone back into, as of yesterday, positive territory. But what we have in place here is a negative divergence. That is, the market has made new highs, but breadth has not expanded to new highs. The same is true of momentum. Momentum's recovered sharply off of its lows of last Monday, but it hasn't made a new high with price. And there's one more that isn't on this chart, and that's volatility. Volatility has not made a new low as the market's made new highs. And so you've got these three negative divergences that are potentially something to be concerned about.
Okay. Jeff, we got a little commercial to take. We'll be right back with Jeff Hughes, folks. Alpha Insight.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're talking with Jeff Hughes of Alpha Insights. Jeff, I have another show to do at 3 o'clock today. Would you be able to join us?
It's 3 o'clock Eastern. Yeah, I can do that.
Okay, great. How about at say about 3:30 you come on and we'll go over some more of this stuff, because I don't know if we can cover it all, and it's a totally different audience. It's Tom O'Brien's show, and of course he's the leader of the pack. But sure. I think this is just such good stuff. That now the next one, we have a question for one of our listeners, and we had Stan Harley from the Harley Stock Market letter on Monday, and he was warning us about the advanced decline line that was also looking rather peaked. You follow that also?
I do. It's just another measure of breadth. And so, we're showing here just S&P 500 breadth. That's an NYSE, many more stocks in the NYSE. And so it's the exact same picture. There's a lot of small caps in that. And that deterioration of breadth means that we've just got a very, very narrow market leadership right now. It's obviously the FANGs, the mega caps that are holding up the market at this point.
Yeah, boy, it's really neat. Now the next one, I don't know what this means. Style box leadership. You wanted to go over the what you're looking at here for the folks. And this one's caught me by surprise. Go ahead, I'll get this up here.
We're looking at two different things here. We're looking at large cap leading small cap now, and growth leading value, which is exactly what you would expect if the FANGs are leading the pack, right? If all these mega caps, because that deterioration of breadth that we just talked about is what has driven the fact that we've seen a big reversal in what was small cap leadership earlier in the year, and actually which began around late October of last year through about March of this year. Since that time, it's seen a sharp reversal whereby large cap has just picked up the baton and started to run, and small cap has fallen by the wayside. And, the lower panels of those charts show that the momentum of the leadership from small cap has collapsed, and so therefore large cap is now leading. Growth is the identical sort of pattern in momentum right now. You've seen value just collapse, right? The recovery trade is collapsing, but the big growth names are now leading the pack, like Google, for example. And so we never really got the big move off the low in value that we got in small cap, right? It was there. It was nascent, though. It never really expanded even to its moving average, and now it's reversed sharply lower. So growth is clearly leading, and, that explains what's happening in the market right now. And, I think the growth stocks and mega cap stocks are really a defensive play. We saw some heavy action in utilities and staples last week and the week before when the market had come under some pressure. That has since dissipated, but I think that it's basically a canary in a coal mine telling you that, all the money's shifting into these defensive havens. I mean, FANG was the big leadership basically out of the March lows because everybody was scared. So like, well, these companies aren't going bankrupt. We're going to buy as much as we can hold of those and wait out the storm, right? And I think a lot of people are starting to notice here that growth probably peaked in the second quarter, and that doesn't mean that earnings are going to decline or anything. It just means the growth rate is starting to deteriorate. And you're already hearing companies, even like Apple, telling you that next quarter's revenue growth is going to be lower, even though it's going to be up sharply from a year ago. It's going to be lower than this quarter because it's tough to beat, the very best results that have ever been presented.
That's for sure. Now, you've got a neat, colorful chart here on sector analysis. Do you want to explain to the folks what's happening there?
Every week, we just publish the GIC sectors. These are the 11 sectors in the S&P 500, and we take a look at what was the best performing last week. And, of course, compared to the market, right? And the market's kind of there in the middle in the bright red. The market was up about 2% last week, and it was led by comm services, discretionary, which includes Amazon and also Tesla, technology, of course, and then healthcare. And I think healthcare is kind of that emerging sector that's not really growth and not really value and not really defensive, but all of those things at the same time. And so that doesn't surprise me to see it there. And, of course, on the far right, you see utilities, real estate, energy, which has been the leader in this big rally off the October lows last year. But it's starting to give back a little bit of its cachet right now.
Wow, that's really good. Now, you've got some actionable trade ideas. We're going to put this up. Jeff, this is such good stuff. How about you starting today at 3:05 p.m.? Because sure, I think this is great because, I basically do futures and foreign exchange, and this is really good underlying stock technical stuff that I really enjoy, and I know the folks at TFNN, and they get a chance to see it from a professional like you. So we'll have you on at 3:05 this afternoon for the Tom O'Brien Show. I'll monitor it, of course, but the information here is really great. Now, this last one is actionable ideas. You want to tell the folks what you're watching here?
Sure. So we publish a list of 10 of our top actionable trade ideas for the next week. Every week we publish a chart like this that shows really what's leading. Now, Stamps.com actually was bought out by private equity, and that's one of the reasons that it's doing so well. Our news guy didn't catch that for us. So basically, we're looking at companies like PerkinElmer, Dexcom, PayPal, Lululemon, Tyler Technologies, Fisher Scientific, Monolithic Power, ServiceNow, and Twilio. Those stocks are all leading the market, or their momentum is so strong that they will be overtaking the S&P on a 30-week relative strength basis. And so those are the stocks that we have a lot of confidence in. And so, we start trying to basically identify companies that can break out and have a nice big move ahead of them. And the names that really jumped off the page to us that have the best potential, in our opinion, are PayPal and Dexcom. And they report tonight and tomorrow, respectively. And so we should see fairly substantial moves in those stocks, especially given the leadership that they've demonstrated coming into the print it basically means that the fundamental investors out there have a lot of confidence in them putting up a big number. And so we would expect the follow through. They're breaking out of big base formations. Dexcom, for example, has a double bottom base formation. It broke out above 440, and it looks poised to us to make a run to 600 at some point in the next 1 to 3 months, most likely. PayPal is the other one that we really like here at the smaller degree base, just what we would call kind of an intermediate term base in an uptrend. And it also has resolved posting a new all-time high last week. And we think that this is poised to make a run to about 395. And, we think we'll get good news tonight. We're using stop losses on PayPal. A stop loss at 280 would protect capital and really establish about a 3-to-1 positive risk skew. In the case of Dexcom, we have a stop loss at 422. Also sets up a 3-to-1 positive risk skew.
Jeff, we're going to see you at 5 after 3 today. We're going to cover everything, okay? These are great charts, and thank you so much. We'll see you at 5 after 3, my friend. Jeff Hughes, Alpha Insights, folks. We'll wrap up the show in a couple of minutes.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I've been asked to take a look at Coffey. I don't trade it. I look at it, and I put it into the 824/7 because people ask for it. But I'll just give you a quick 10 heads up here. This is the daily coffee chart. You can see he had that big move. Now, folks, if you look down there in March, that key support, Mr. Z was standing on a soapbox yelling and screaming to buy coffee. I mean, look at that. It's perfect A, B, C, D, right on the bottom there at 120. It went to, the high has been 215, it looks like. I don't think this is updated yet. I believe it went a little bit higher, but it's amazing, what's happened to this. No, that has been high, 215. So we look at this on the weekly chart. I'm trying to, you'll see here, there it is. You'll be able to see it right here. And hold on one second. We'll get it up here. There we go. And you'll see now, I don't trade coffee. It's tradable. It is good. But, the reason why is back in 1974, when things were going really crazy, I had 4 coffee. I was long. It was limit up. And I told him to sell it at the market, and I got filled limit down, and I never traded it again. And all it was I happened to pick the exact time of the high, and boom, it was over. And I blamed it on the market, and it wasn't that. It was just my timing was just off by seconds, I guess. But that put a bad taste in my mouth, and so I don't trade it. But it's very tradable now, especially electronically. And of course, this is related to a frost that's going on in Brazil. And, we're going to see some pretty wild swings here and all this stuff. You've got to learn to use stops, folks. It's not about the money you make. It's the amount of money that you don't lose. And that's the key to paying attention to these markets, is that's what you want to be looking at. It's got to be all related to the risk. There's no other ifs, ands, or buts. So live every day in an attitude of gratitude, and may God bless. I'll see you on the flip side tomorrow. And we will have Tim Boss as our guest, and I'll be on 3 o'clock today with Jeff Hughes to give you more of some of the insights of these internals of the market that I think are great. We'll be right back tomorrow, folks. See you then.